Good afternoon, everybody. Welcome to this week. And let me tell you what a week it has been. Also, welcome to St. Patrick's Day. We've got a holiday on the stream. That's cool. You're going to see that we're going to have, we're going to have green. We're going to have leprechauns. We're going to have all of those things popping up on today's stream. So that is absolutely fantastic. Now, I, of course, had the beginning, that little musical thing at the beginning, but I realize those of you who are watching ads probably don't get to see any of it, but at least 30 seconds of those ads, there's nothing but a countdown on the screen. So you're not missing much. And I also kind of ramble at the beginning right away. So that way there, you don't miss anything important. All right. So I'm really looking forward to the show. We got some news. Let's start off with a really big news. Jury duty. I have gotten out of it. So I will not have to be reporting for jury duty on Monday, which is fantastic. So now as a result, because I've been saying to you guys, I can't schedule anything and I can't tell you what's going on after this week, but now I can. And we do have that special crypto night type video. So I think I'm calling it This Week Crypto Night. We're going to do that on April 10th. So I'm trying to get some guests together for that. We'll have to see who I can find. Problem is, I'm on the stock side. Being on the stock side, I don't have as many crypto contacts as I would like, but I'm still putting the feelers out. If you know of anybody who might want to be on that stream, hey, let me know. I'll definitely have a talk with them, all of that fun stuff. Now, at the top of the show as well, I did gift a single membership because I wanted you guys to look below where it says the green, basically the little box that says, what does it say here? Gifted 1 Mountain Finance membership. If underneath of it you see another box, a gray box with a link on it, that means you've got gifted memberships turns off, and that means you can never win. So turn that on. That way there you can win when somebody, myself, or sometimes there's folks in here as well that do the gifting. So definitely turn that on. Okay, before we get too much further, there is so much action in the chat. Let's get right into it. Sammer was here first because, well, it'll be good for sure. Yeah, we're going to do our best. And of course, a big happy St. Patrick's Day. And Mr. Math is the goat. A little goat, and everybody having fun with some emoticons. I love it. I love it. Vic says, swerving, merging, parallel parking, but I'm here. Awesome. Just drive safe. Drive safe there, Vic. Mary is in the house with a happy St. Patrick's Day. We got Bismarcky in the house saying happy St. Patrick's Day. We got Sammer saying, Brunes TARDIS all. It's starting to sound like Doctor Who episode, but I know I completely butchered that, Sammer. I apologize. My Spanish is even worse than my French, so I'll just put that there. Paul's in the house with a happy St. Patrick's Day. We got King of Day saying hello, and Bleak is in the house. Hello, Bleak. Always good to see you. Bleak is actually our first ever channel member, so Bleak holds that distinction. Oh, wait a minute. No, it's not Bleak. Sorry. I do not know where I was thinking, but anyway, no, I'll tell you about that person when they show up. Ian is in. Whoops. Here we go. Ian's in the house. I might finally get to catch a live stream. My girlfriend is sleeping. Ooh, nice. And Carl's in the house with a quick hello. And we've got Vineet in here with a hey. And we've got Prairie. Prairie actually won a free membership when I was doing that demonstration. So that's pretty darn fantastic. Good afternoon, Banana Bread Brigade. Thank you, Candace, and congrats on the jury duty. Yeah, congrats on not having to do my duty. I love it. Um, Paul says, Ian, if your girlfriend messaged you that she is taking a shower, you can leave. There we go. Paul has given you something from, I think that's out of the bro code, maybe. I'm not sure. Mark is in the house with some magic hands. That's what I think. Magic hands. Hopefully, I'm reading that right. And we have, of course, we've got Lisa in here saying, hello, everyone. Happy St. Patrick's Day. We got Patricia. Whoops, right over here. And Vic isn't there a movie called Jury Duty? There might be. There was also a sort of a reality show as well called Jury Duty, where basically everybody was actors except for one person, and that one person thought he was actually on jury duty, and then all kinds of crazy stuff ensued. I watched that. I actually enjoyed it, so I thought it was kind of funny. Vic says, "How did you get out of jury duty?" Basically, I have a doctor's appointment on Tuesday, so I I reached out to my doctor and I said, "Hey, can you write me a letter excusing me from jury duty?" And she's like, sure. So I got a letter. I gave it to the sheriff, and the sheriff was like, okay, that's good enough for me. So that's all it took. Enid is in the house. Good afternoon, everyone. And I think Enid is driving to Vancouver today as you're watching this. I think that's what I got out of the Discord. Those of you who don't know what our Discord, there's a link down below. We have a Discord. It is super active. Now, I just added this bot to Discord, and don't worry, it's a good bot. Basically, there's little commands you can put in and tell it which stock and what time frame you want to look at its chart, and it will then pop the chart up for you automatically. If you go and look, there's a little, there's one section called bot show or bot stuff. If you go down and look on that thread, you'll see some of the commands in there. It's really, really super easy to use, and it's fantastic. So that's a new highlight over there on the Discord. Also, we've also got a big presence over on Blossom. So Blossom is that social media app for, well, Canadian investors, also American now. We do have Americans coming in because we have expanded into the States. So basically, I should stop saying Canadian. I should just say North American, but it is an awesome place. There's a link down below. If you go over there, be sure to follow me because I'd love to follow you back. So that way there we can talk on Blossom, and we'll talk more about Blossom. Maybe not in this show, but we'll see. We'll see when. Enid says my hubby is driving. Awesome. That makes it nice and easy. So I can pay attention to you from the passenger seat. Yes, until you get to a part of the mountains where you just lose your signals. Because I know sometimes going through the Rockies, you can sometimes lose connection to pretty much everything. Right. Ian says, I got a letter about jury duty a long time ago. I replied as late as possible and made sure I had a lot of spelling mistakes on the forms. I got rejected. Oh, awesome. That is awesome. And of course, we have my beverage of choice, a coffee here, in my Starbucks mug. So Starbucks, you know my number. Well, you don't, but just call me anyway. There we go. There we go. Woohoo. Okay, Paul is saying Bitcoin is up 2.33% today, setting up for Monday BTC, so ETF inflows. Yeah, it's kind of interesting because Bitcoin, now that we have all of the US ETFs, spot ETFs, we're finding a lot of the action on Bitcoin happens during trading hours now. Whereas because it's open 24/7, a lot of times it used to always happen at night. Although I will say, we did have quite a slide on Bitcoin on the weekend. We're going to talk a little bit about that later as well. So we got a whole bunch of stuff to get to today, which is fantastic. Kevin is in the house saying Starbucks couldn't be so lucky to scoop you up, my dear. Yeah, exactly. I think that's exactly what I think. I did. I'll tell you guys something I did. Maybe I'm jinxing myself, but on Friday, I sat down and I wrote a nice letter to Canoe EIT. And I said, hey, you guys should sponsor me. So we'll see how that goes. I didn't just write a letter and said, hey, you guys should sponsor me. I actually wrote why and how this channel, I think, would be a benefit for them. So we'll see how that goes. Yeah, that's me reaching out to see if we can get a sponsorship. So, and Canoe is a company I would be more than happy to accept a sponsorship from. All right. And Enid says, yeah, brilliant idea, Ian. There we go. As in the spelling mistakes to sort of get out of the jury duty. All right. Now, I will say, if you notice from our little image over there of our normal bull and bear, this time we got them having some green beverages. So I did say that green is going to be a theme going through the show. And in fact, all the images that we're going to use, I think they all have leprechauns in them. I think they might. So let's jump into our first news story, and that way there we can actually take a gander at the first one. All right. So we had some sticky inflation numbers coming out in the US this week. So both the CPI as well as the PPI came out. Now, for the CPI, the regular CPI was actually okay. They had forecast as 0.4%, and they did get 0.4%, exactly as expected. However, their year-over-year forecast was 3.1%. It did come in a little bit hotter at 3.2%, showing there's a little bit of inflation still kind of getting sticky there. Now, when we look at the CPI core, now the CPI core, that's basically you're looking at the same basket of goods as you do with the normal CPI, but you're removing the hot stuff like fuel, for example. That's one of the big ones that's removed off of that one. So energy and food. So the CPI core, their forecast was 0.3%. They did come in hot at 0.4%. And the year over year forecast for the CPI core, they came in at 3.8%. They had forecast 3.7%. So the CPI did come in a little hotter than expected. And obviously the Fed is not happy about that. The 12-month pace right now, it is off of our inflation peak. But it's still well above that 2% target that the US Fed was hoping to get. Now, we also had the PPI come out. So the producers price index, they were forecast to come in at 0.3%. And holy banana bread, they came in at 0.6%. They came in very hot. Now, this PPI core was forecast at 0.2, and that doubled as well and came in at 0.4%. Now, they do say that most of this data, most of us coming in really hot was for the simple reason that fuel was up 4.4%. So that could very well be, but all of this data is certainly going to be taken into consideration by the Fed as they announce their next rate decision. And that, my friends, is really, really close. It's actually March 20th. So we're getting really, really close to that. So yeah, in the US, we are seeing inflation being a little bit sticky. It's not so bad in Canada. And what's really interesting, well, we'll jump ahead. Why not? So next week in Canada, we are going to have both of our PPI and our CPI. Both of those are coming out, and we'll be able to see how it's doing over here. So far, we've been doing really, really good. We've actually we're under 3%, which is fantastic. So we'll see if we can maybe get a little bit closer to our target. But we do have that one problem coming up, and that is April 1st. So April 1st, the carbon tax is going up. And because the carbon tax is going up, that means that we're going to have a stronger, basically, contribution to things like fuel prices that could certainly not help, but could certainly hurt or help inflation stick a little bit. So that's something we do definitely need to sort of keep in mind. So it's not great in the US, much better in Canada, but we got Trudeau's carbon tax going up again on the April 1st. And even though a lot of the premiers have been reaching out and saying, please, please, please don't do this, it looks like the government is sticking to their guns, and it doesn't look like we're going to get a reprieve. We still get a couple of weeks, so maybe something will happen between now and then. But I'm not holding my breath. I'm definitely not holding my breath for that. So we have to sort of keep that in mind. Ian says, I would not have bought Canoe if I did not hear about it here. There we go. See, Canoe? If you guys are peeking in Canoe to see what type of channel I am, look at this. I'm bringing you guys business. Bismarcky says, that's funny. I have a market order for 100 EIT shares tomorrow. Look at this. This is like a community built for Canoe. Paul says, had to switch the HVAC system from heat to auto last night so the cooling would come on. Well, that's not a bad situation to be in. We're actually getting a pretty cold week coming up. And here he is. Here's Jay. Jay is in the house. Jay is who I was actually talking about. Jay is our first ever channel member. Awesome, awesome, awesome support. Always thank you, Jay. Always appreciate you. Terry is in the house. Go, go, go. Monster Beverages. Hello, crew. There we go. I don't know. Maybe you guys are all sitting back enjoying a green beverage today. I'm not. I'm enjoying coffee right here. Very good. Paul says some of those energy drinks do not have the greatest ingredients, so a hard pass. Yeah, absolutely. Um, and Kevin's saying the carbon tax is a scam. And Paul is saying Costco in Canada has lower prices on some things. I buy the 2K frozen blueberries at Costco during the pandemic. It got up to $16, but now it's back down to $13. So that's good. That's good. I like to see that. Nine is saying Canoe is great. Mary saying, I bought Canoe because of you as well. There we go. We got Rooker in the house saying, how do you feel about dividend growth stocks versus covered calls long term? That's a fantastic question. I prefer like long-term dividend growth is going to win. So total return stocks. So your dividend stocks that also have a little bit of your dividend stocks. So your growth stocks have a little bit of dividends. They're going to be covered calls hands down on a long-term time frame. What I like with covered calls is for me, I see them as being more situational. Now, to a certain extent, I'm going to explain here in a second. So when I say situational, right now I will, for example, if a market is very bullish. So let's say, for example, I'll give you a perfect example. When the AI, I'm going to call it the AI revolution, but when AI pumped up the market beginning of last year, I got into QQCC. Because I knew I was getting a fantastic dividend on it, and I wanted that income, but I also knew I was going to get a nice pump in growth. And that to me, I was fine with that. Now, I could have gone into a straight ETF and probably made more total return wise on it. And long term, I would do that. But for me, I sort of guys, I guarantee, I look at each situation and I sort of say, okay, is this a situation where I do want to do it? So I do it situationally. Now, the exception I was talking about is those people who want especially as you're heading towards retirement, if you're looking to create, for example, an income producing TFSA, because, there's a lot of people who are like, I just want that tax-free income coming out because that will make the difference in how I live. So that's another place where I think covered call ETFs fit in really nicely. And now you can still, though, I'll just put it out there. You can still have a total return TFSA into retirement. And instead of living off of the dividends, you got that little bit of dividends, but you could live off a percentage of the growth. So let's say, for example, if you had a total return TFSA, let's say that TFSA was growing by 15% a year, not counting the dividends. So let's say you had your dividends, and then you had 15% of growth. You could always take like a percentage of that growth by just, by selling some of the stocks. So that's another way to get tax-free payments. However, here's the thing. It's more management on your part. So you're doing more for it, opposed to with the dividends where you're just sort of letting them flow. So it's kind of an interesting thing. It really boils down to how you want to approach it. So a lot of people will say, my way is the best way to invest. That's BS. It's absolutely BS, because I think there's many very valid paths when it comes to investing. If you want to be like, there are people out there that love dividends so much, maybe they're not getting the best, the best returns. They could probably do better with some growth, with some dividend growth stocks, but they just that shot in the arm of getting all those dividends, that might be what keeps them into investing. Maybe that's why they're there. And I would rather somebody be getting all of those dividends than not investing at all. So there's a lot of different ways you can sort of look at it. All right. Prairie says, Enghouse Systems first quarter 2024 came out this week. Earnings revenue beat expectations. That does not surprise me. EPS lags. So dividend increased 18.2% to 26 cents from 22 cents. So yeah, absolutely. And I did a recent deep dive on Enghouse Systems. I do like the overall look of that stock. I do think they're gonna do well on the long term, so that might be something, if you haven't caught that, a deep dive, you might wanna just check it out. Maybe do some due diligence on this stock and see what you think. Paul says, "Got to 22 Celsius on Saturday. Holy cow, that's pretty darn good. I like that." I don't think it got that warm here today or even yesterday. Let's see, Vancouver, Vancouver Isle Gal. Kevin wants to know where you are, Paul. Mary says, "Hit the like button." Yeah, absolutely. When you hit that like button, it basically the algorithm knows that that basically knows people are watching and enjoying what they're seeing here, and it brings more people in. So it's always a good thing that way. And Kevin says it got to 20 yesterday here as well. Now, of course, you know, West Coast. That's not a 20 is not a hard bar, really. It's an easy one. Let's see. Anyone besides me super excited for the NVIDIA GTA conference tomorrow? I probably won't be watching it, but I will be watching videos analyzing it because I certainly can't wait to see what comes out of that. Now they are working on a new chip, and I think a lot of information on that chip will certainly come out in that conference as well. So definitely will be something to be watching out for. Paul says Tri Cities, BC, Lower Mainland, and Kevin, just to sort of jump back here, you can always sort of I don't want to say live stream it, but you could always in the Discord just sort of drop some stuff if anything big drops and say, guys, you got to check this out. That would be fantastic. Abalash says, what are your thoughts on Canada Western and Laurentian banks? They fell on Friday, especially Laurentian Bank. So between the two of them, I like Canadian Western Bank a little bit better, but they're both in that situation where they don't have the same size moats as what the bigger banks have. So they're going to struggle a little bit. Once the rate cuts start happening, that may help them a little bit. But long term, I think once we're into a full on bull market, I think we'll start to see a little bit more recovery with these banks, especially Canadian Western. I do like them a little bit better than Laurentian. Change Despair says, I still have 40K contribution room for my TFSA. I had to take a few K out for car this year. Do I really need to wait for January 1st to contribute again since I wasn't maxed out? This always confuses me. Okay. So I'll clear this up for you right now. So let's say, for example, you took out 20,000. So if you took out 20,000 to buy a car, but you had at that time, you had 40, let's say you had 40K contribution, then you took out 20K. Well, you still have that 40K contribution, but the 20K you took out in January, you'll get that back. So when you look in the CRA and it shows your contribution, usually what it's showing you is what you had last year. It usually doesn't get updated until your taxes all come in, and then that all gets updated pretty darn soon, depending on when your taxes come in. But so yeah, if you had 40K before it, you're fine to use that. You just have to, and this is the kind of thing when you're playing around with your TFSA and you're playing around with your contribution room, it doesn't hurt to sort of keep track. So you don't have to, I was gonna say you don't have to keep track of what you put in, but that doesn't hurt doing that either. If you know what your contribution room is, then you can sort of play things around pretty darn easy. So definitely something to sort of think about. But yeah, if you had 40K in room and then you took 20K out, you still have that 40K. It doesn't impact that number at all. So you should be good in that case. Just don't put in more than the 40K. That remaining 20K, you'll have to wait until January 1st. All right. Kevin says, what do you think NVIDIA does in the market tomorrow? It's going to depend on what type of announcements come out of the conference tomorrow, what time they come out, because that will be a big thing. But let's say, for example, if they come out and they announce this new chip and they show it and it's like absolutely gangbangers, well, you'll be able to just watch the chart and you'll see them going up at that point. So definitely one of those things to keep in mind. But I think overall, this should be positive for NVIDIA. Let's see here. Gmark says, is Tesla a falling knife or a good DCA point? That's a good question about Tesla. I mean, Tesla has absolutely struggled. They're down, but I don't think they're out. I never count Tesla as being out, only because Tesla has this history of every time everybody and their dog thinks they're a falling knife, of turning things around. I don't think they're going to turn it around fast. So to me, Tesla at this point in the game, it's one of these. It is a good DCA, and also what I call just sort of a throw some money in it and forget about it, and then maybe look back on it, next year when Tesla's doing better. So that's kind of the way I would look at Tesla. Yeah, you're welcome. Absolutely. Let's see. Tesla will be a big stock in a year or two, I believe. I think it's going to drop in price more. I will buy at 150. It's hard to say. It's hard to say. It may drop more, but that's why a DCA is nice, right? If you do a little DCA, like let's say you're buying $100 a month of Tesla, and it does drop a little more, well, fantastic. If it doesn't drop a little more, you'll be glad that you started the DCA now, opposed to later. G Mark says, for Canadian tax purposes, is it better to keep Canadian stocks in a TFSA RRSP or in a cash account and just pay the tax hit? I don't want too many Canadian stocks. Need to diversify. Okay. Here's the thing when it comes to where you should be holding your stocks. So if you have, we'll talk Canadian stocks initially. So there's, you have Canadian stocks, or maybe you have US stocks. But if you have Canadian stocks, typically, if you've got room in your TFSA, that's where I'm going to put my stocks. That's one of your goals in moving towards retirement. You want your TFSA full if you can get it there. You don't, it doesn't matter. Like the RRSP, like some people, I've seen people thinking, okay, well, the RRSP is my retirement, my retirement account. So I want to put stuff in that for retirement. Well, that's not what the RRSP is really for. The RRSP is for tax deferral. So if you have, for example, a year where you're making crazy amounts of money, those are the years that you would put it into your TFSA, or your TFSA into your RRSP, because then you're not going to pay the tax on it. And when you theoretically pull it out later, you're going to pay a lot less tax on it. You're going to be in a much lower rate, especially in retirement. So that's kind of one of those neat things. Now, here's another little tidbit too. So when you have your money sitting in your RRSP, let's say, for example, for whatever reason, you have a really low income year. If it's lower than what you're expecting to be making in retirement, and you've got room in your TFSA, you probably want to look at pulling a little bit out of your RRSP and moving it over there. That's how important it is, because everything coming out of that TFSA in retirement, it's all going to be tax-free. Tax-free is huge. So it's not going to be pushing you up any tiers. It's just straight free money coming out of it, especially if you've got, whether you're using income or whether you're looking at just pulling out a percentage, that type of thing. So beautiful thing is, I have a video coming out on Tuesday, and it's on the RRSP meltdown. So, you'll be able to check that out. So that one's going to be kind of cool. And the funny thing is, I already have it done. It's already completely done. I'm going to upload it. I think I'm uploading it tonight, so the channel members can actually see it later today, which will be kind of cool. But let's just get back to your question, because I kind of went off on a tangent. So yeah. So when you're looking at your stocks, so let's take a look at American stocks, for example. So with American stocks, if you've got a dividend on that stock, like a higher dividend, you want to put that into your RRSP, because you don't want to pay withholding tax. If you put it in your TFSA, that 15% withholding tax on that dividend, that'll just be taken. So you will receive 15% less than what you're entitled to. You can't get that back. It's gone forever. But in your RRSP, you get the full amount. There's no withholding tax taken off. Now, when it comes to Canadian stocks, there's a few different things you might want to look at. One is, what is that Canadian stock? If it's not a company, let's say it's a Canadian ETF, what is that Canadian ETF holding? Because if that ETF is holding all American stocks, especially if it's holding American dividend stocks, some of that money is not coming into the ETF manager, because they're paying the withholding tax on it. Now, that doesn't affect when you look on, let's say, for example, you're looking at HYLD, so the Hamilton one, that money is taken from Hamilton before they get it. So when they show you the dividend percentage that you're going to get, it's not doesn't impact that at all. Other than the fact is, if you had a U.S. Equivalent ETF that did the exact same thing as HYLD, you would get a tiny bit more if you held it in the RRSP because you wouldn't have that happening. But it would have to be an American actual management company doing it. So just sort of the thing to keep in mind. But if you have a situation where you have a personal account and you've got a TFSA and your TFSA is only half full, there's no reason, unless you're doing swing trading or day trading, to be putting stocks in your Canadian account, in your regular account. So in your cash account, no reason at all. Um, Unless, like I said, unless you're swing trading or day trading. Now, if of course you've got your TFSA full, then at that point, what you want to do is your heavier dividend stocks, you want them in the TFSA, and the bigger growth stocks, perhaps keep those out on your in your cash account, because then you're only going to deal with taxes when you actually sell and create capital gains, or capital losses if you're looking to like tax loss harvest, all of that fun stuff. Okay, I think I answered the question, hopefully. Let's see. Tesla is very advanced robots. Yeah. Oh, there's a lot of really cool. Like, did you guys see the Figure One demonstration that OpenAI gave with this robot and the whole thing with the apple and the dishes? Just amazing. It's absolutely crazy how far we've come along. Let's see. RRSP for U.S. stocks, for U.S. dividend stocks. So if you have a U.S. growth stock, so let's say, for example, Google. Google doesn't have a dividend; it's pure growth. That one's perfectly fine in your TFSA because it's going to grow, and you don't have to pay like capital gains on that growth. But on the dividends, if you had a stock in there like Union Pacific that has a dividend, you're going to pay 15% on that dividend. So that's kind of that whole thing. Let's see. In RRSP US fixed income, there we go. And let's see. All right. Abelash says, I got BCE at 46. Hope it doesn't fall down further. I'm hoping not. I know I did a deep dive on BCE. What was it, last week or the week before? I like their fundamentals. I think their fundamentals are nice. Now, here's the thing. It did fall a bit this week, but the whole market fell at the same time. So when I look at something like that, when I think somebody's near a bottom, if the whole market falls, yeah, they're going to go a little bit further down too. Where I get concerned is when they're falling and the market's moving in the other direction. So I'm still pretty confident. I'm still pretty bull on Bell, because I know I had a few people sort of say, oh, look, it went down a little further. And I'm like, yeah, that's fantastic. It's a great opportunity for you to get an even better deal than where I bought in. G-Mark says, for context, I'm in a high income tax bracket right now. I have both TFSA RRSP maxed, just trying to figure out where to put S&P 500 international Canadian dividend stocks right now. We'll have to pay the tax. All right. So yeah, if you've got them maxed, then you're in a situation where you have to use your cash account. If you have, this is kind of where I would look at it. So let's say, for example, you have stocks in your TFSA right now that are just straight up growth. I would probably consider moving them into your cash account and putting in your dividend paying ones in the TFSA, just because then you're not dealing with that 15% attacking your dividends as they're coming in. So just a thought. All right. Let's see. Always maximize TFSA. Yeah, absolutely. Absolutely. Your TFSA is your I don't want to call it. I call it your party your party account. It's the one that's going to give you all of that free return. So you got to love it. Patricia says, I picked up 2 BCE stocks while it was down. I'll try to pick up more this week. All right. And Rooker says, what's your favorite utility if you had to pick one? Thanks. Probably, I love Fortis. They haven't been doing well. They have been struggling, but the company wise, I do like them a lot. And I like their long-term prospects. So it's kind of one of those ones where it's like, you're not getting a lot out of it. I think Enbridge as well is going to do well long-term. Now, one option is if you're looking for, let's say, for example, you're looking for some income. You could play. There's a split core. It's called ENS, the E split core. They basically only hold Enbridge, but they have a really crazy return. So there's going to be some money that you can make with that one as well. Just a sort of a thought there. Paul says, pick your tax bracket. You do not want to go over and move the amount of RRSP to your TFSA in kind, and I assume Wealthsimple will sell enough shares for withholding tax. Yeah, I mean, you don't, whatever your brackets are, you don't want to go over it. When you're looking at your TFSA, there's definitely a pretty heavy fee when you are going over your limit. So that's why I say always pay attention. Pay attention. Know what you have. Um, if you do not like spreadsheets, I would suggest learning how to like spreadsheets, or maybe just finding a financial software that you can use just to pay attention. Know what your limits are, know exactly how much you've contributed, all of that fun stuff. All right. Nina says, can you do day trading or swing trading in your RRSP or Lyra? So yeah, so with an RRSP, and this is the simple way to sort of think about it. Everything that's in it is going to be taxed when you pull it out. So they don't actually care. So they don't lose money if you're swing trading. Like CRA doesn't lose money if you swing trade in your ENI, in your EN. I was spelling your name in your ENID in your RRSP. So they won't lose money. So you could, let's say you're the best day trader in the world and you do it all in your RRSP and you make hundreds of thousands of dollars. They don't care. They're going to get taxed. That's 100% taxable when you pull it out. So for that reason, they really don't care if you day trade or swing trade in that account. The TFSA is different because where it's tax free, that's kind of abusing the whole system, and that's why they will. They're not going to throw you to jail for doing it. They're just going to give you a big tax bill. Now maybe if you don't pay the tax bill, they might. There could be ramifications further down the lines, but. Yeah, so RRSP, you're safe. Also, what are your thoughts on the relatively new Canadian CDRs as a way to hold U.S. stocks, but without the conversion hassle? I like CDRs. To me, it's like if you're looking at long-term investments. So let's say your example, you're in for the longer haul. CDRs are fantastic. The only issue I would have with CDRs is if you're a day trader or a swing trader. You don't have as high of a volume on a CDR, so those are probably not the best things to swing trade. Though I have swung trade a CDR before, so I just want to put that out there that I sometimes go against my own judgment. But no, I do like CDRs. They are a way to get in there. Now, if you're with Wealthsimple, though, you can go fractional. So, when you're looking at some of these larger companies, you can come in on a fractional, and it's kind of still the same thing as having a CDR. But once again, you do have to deal with the conversion stuff. If it's a US company. So CDRs, you don't, it's because they're owned by, I think it's mostly CIBC. Paul says, BCE Bell just told employees to move from Brandon to Winnipeg or take early retirement. Holy banana bread. Yeah, that may have a little bit to do with some of the restructuring that they're doing. And this is one of the things too that does excite me as well about Bell. We didn't really see that in their last earnings report. We didn't see a lot of the restructuring because it was announced when they were announcing their last earnings report. So I think in the next couple of earnings, excuse me, I think in the next couple of earnings reports, we're going to definitely have some very interesting statistics coming in. Here we go. Holy cow. All right. Kendall says, it's much safer to do that in non-registered account. It is, but there's no ramifications in an RRSP. The only issue is if you're day trading in it to make income, you're going to be in a situation where everything you pull out is going to be income. It's not going to really, so your losses, and this is kind of that thing. So the losses that you take when you're day trading inside of an RRSP, and this is a good point, Kendall, thank you for reminding me, you can't really apply them against anything. So if you're losing, you're not getting, like when you do a day trading in a regular account, your losses, that's business losses. So you can actually use that to offset business. Well, not, you don't want to offset business gains, but your business gains will offset your business losses. In your RRSP, there's nothing to really offset your losses. You're still not paying taxes on it though, but you are paying taxes on everything that you pull out. So we'll have to look at it that way. All right. Abalash says Canadian Utilities versus Fortis versus Enbridge. What are the differences? Well, Canadian Utilities and Fortis, those are both dividend kings. So there are only two dividend kings in the country. They're both, I mean, Fortis, I think right now, Fortis is biggest of them. Like Fortis is huge. Fortis basically has a very strong North American reach. Enbridge is also pretty darn, like they're all three of them are really good companies, but it sort of boils down to what you're looking for. Now, if you're really wanting the dividends, you're probably going to lean towards Enbridge. But Fortis to me is just Fortis is big. They're huge. I can say the same thing though about all three. So I want to say which is better. It's more or less what they're providing. Like they're all providing utility. So right now, like for example, I have Enbridge in the house. Like my natural gas that comes in is actually from Enbridge. Fortis is big. They have a lot of presence in the U.S. They come out of actually Fortis is their main office for Fortis is actually St. John's, Newfoundland. So, but no, I do like them all. I do like all three. I think all three are fine investments. But if you are leaning towards the dividends, then you probably want to go to Enbridge. And well, hello there. Oh gosh, I'm going to attempt to say your name. Jen, no, Denjika Tarv. All right, I'm sorry. I am absolutely horrible with names. Paul says back of napkin for Mr. Math calculations. There we go. And there's a second high, and then a third high. Um, you definitely like to say hi. I will give you that. Vic says after deliberations, the jury has returned a verdict. This channel is awesome. All right, there we go. Back to our jury theme. My God, we haven't even gotten to the next news thing yet. I got to get caught up. You guys aren't letting me get caught up. It's hilarious. G Marks, I love covered calls, but Ben Felix says they are suboptimal. Optimal. What are your thoughts? Do you use them? Like I said, I will use them situationally, but most of my long-term investments are total return stocks. They will beat covered calls hands down. Now, in the 0 to 100K challenge that I have a video that comes out every month on that. I just added a little challenge where we're actually looking at basically a tech ETF versus the covered call version of it. And we're going to compare it and see how they're doing. And guess what? Already early, the regular ETF is beating the covered call one. So we'll keep that going as well. Another high. Yes, my day is going well. I hope your day is going well as well. Push the like button, says Enid. Absolutely. Hit the like button. Slam it down. Let's get that going. G Marks, good point. CDR volume is pretty low. Yeah, CIBC is the custodian. There we go. When is TELUS and BCE going to merge? I don't think they would be allowed to be honest. I think if they ever try to, the government, the government would never let it happen. So I would say never. Thoughts on when HMM.A might go up? See that it might be a good time to buy even more. Now HMM.A, so that's the little Hammond stock, we're opposed to HPS.A. I'm very bullish on HMM.A. I think they're going to go up in the long term. I can't tell you what they're going to do tomorrow or what they might do next week, but I think they're a very good stock. Now, if you look at HPS.A, because they have the same clientele when it comes to who they're servicing, and they actually work really well together because HMM.A, they do a lot of the enclosure stuff, whereas HPS.A does a lot of the actual electronics aspect of it, transformers and things like that. So I kind of, when I look at the way HPS.A exploded, I see that same potential for HMM.A. So, will they go exactly as is? Nobody knows. But I think the potential is there. So I would say right now, um, they're really, really in the small part of their growth. And even though they've been having fantastic growth, I have high expectations for where they could definitely end up going. Let's see. Kendall says, don't you lose that room in your RSP if you lose money on the day swing trades? Yes, you do. Absolutely. Any trading that you do and that's another danger as well in your RRSP, is that yes, you will lose contribution room, but you'll also gain contribution room as well. Well, I don't even want to call it contribution room because the thing is with your RRSP, if you pull something out, that room is gone forever. So you never get it back. It's not like the TFSA where you just wait until January. So that is something to certainly keep in mind. So I think when people ask me, can I day trade or can I do some of these swing trades? I don't think they're looking to do it like as full time. I think they're more or less saying, okay, well, I see a couple of opportunities and I'm going to make a bunch of money, which would grow my RRSP if I do these couple of swing trades or this, couple of day trades here or there. I think that's fine, but you want to be aware. Yeah, you definitely want to be aware that if you lose, if it goes the wrong way, you've shrunk your RRSP. You don't get that back. But if you did a trade the following day and it then regrew it, you would certainly have that space because of that. All right. Vic says, can you believe there's such a thing as a too big of an RRSP? So a meltdown strategy is needed. Now, only if someone would make a video on it. I did make a video on it, Vic. It's coming out pretty darn soon. Like I said, with your RRSP, and I'll just point this out right now, it's for tax deference. That's its big role. You don't really, your goal shouldn't be to completely stuff your RRSP, unless, of course, if your TFSA is full, then sure, why not? But the big ramification with your RRSP is if you've still got a lot of money in your RRSP when you die, and you don't have either a spouse or a dependent, as in a dependent child, then that's going to get hit tax wise at whatever the rate is. So let's say you had $200,000 there, that would be equivalent to having $200,000 of income, and the taxes are going to hit that big time. So that's one of the reasons that you want to start looking at, and that's the whole idea behind a meltdown. And you guys will see that as well. Those of you who are channel members, you'll probably see that later today because I'm going to upload it today. Everybody who's not a channel member, that's the normal Tuesday video. So normally channel members only get to see things one day ahead of time. But this was where I didn't know whether or not I was being able to get out of the whole jury selection thing on Monday. I had to have it done just in case I couldn't get out of it. So that is fantastic. All right, we got some shamrocks. Thoughts on NVIDIA and semis this week. So I think NVIDIA could have a very strong week, depending on what's going to come out of their conference and the whole new chip thing that they're going to develop. I think the AI revolution, I'm going to call it a revolution. I think it's just beginning. So a company like NVIDIA is really well positioned in that. I think, whether or not they go down this week or go back up next week or down the next week, if you're looking at them from a long-term perspective, they are going to absolutely explode. All right, now before I get to the next set of questions, let's get one more story done here. Holy banana bread. You guys are just, you guys are awesome. All right. So open banking in Canada. So with our next budget, the government is set to introduce this concept called open banking. So what it is, in a nutshell, is the system that lets users decide how their financial data is shared. So it allows banks to share some of your financial data with third parties. So basically with an API. So that's like a little program that will allow for partial access to some of your banking information. So currently, the way it works right now, if you're involved with, let's say, a fintech, some of the fintech apps will actually want like your username and your password to get into your banking information. And that is kind of dangerous. Like most of them are probably very reputable and you're okay. But you don't want to take that chance. So now with open banking, they'll be able to basically set it up so that they could have access to parts of your bank. So the information, but they couldn't go in, for example, and make withdrawals or or make any changes within your bank account, that type of thing. Um, the reality is, though, most Canadians don't actually use fintech, so it's not really a big issue, but it's kind of one of these things around. Now, what it will do is, with a lot of smaller banks, so you take something like an EQ Bank, for example, it will make it a little bit easier for you to be able to transfer to some of these banks. So that's going to be, or to fully switch to these banks. So we're going to be interesting. It's going to be neat to see as this unrolls. But yeah, this is coming up in the budget, so it's a neat little thing there. And of course, we have our St. Patrick's themes continue with a leprechaun with a bank vault. So there we go. Let's see. Now, if only someone would release that meltdown video. Vic, I'm doing it. I'm doing it, my friend. Um, my prediction: Tesla $150. Whoa, Nvidia 856, CSU 5000. 9 says taxes brutal in your RRSP/RRIF if you die with a big amount. It sure is. And here's that thing too. I mentioned as well, like that's if you die without a spouse. But if you have a spouse and you roll it over to them, if they're just as old as you've basically just given them your problem. So then when they die, it could even be worse. So you always want to, that's one of the things. Yeah, I'm not going to talk much about it right now. So you'll have to watch this video, but definitely want to just say you don't want to die with a big amount in your RRSP. Unless, of course, you really, really want the government to get that money, then you're gold. You're golden. Ambas says, appreciate how you allocate portfolio to non-registered TFSA and RSP, an example and why, with Canadian tax credit and dividend benefits. So best for Canadian high dividend stock and ETFs, TFSA, mixed global. Yeah, so when you're looking at putting some dividend stocks, so let's just say, for example, you're putting some dividend stocks in your cash account. Well, one of the things you want to know as well is, are they eligible dividends? Because, taxes are treated a little bit different depending on whether it's a Canadian eligible dividend or whether it's a non-eligible. And then there are various, of course, taxes that you can get back. So there are tax credits on dividends that you can get back at tax time as well. So that's one of the reasons that I usually will say that it's not a bad place to put them, but it's a little bit more work for you when it comes to tax time. If you don't have to, if you don't have to do that, and you can just have it all sitting in your TFSA, you're still better off for that reason. Let's see. Paul says, run portfolio visualizer on Alimentation Couche-Tard versus Enbridge back to 1997, starting with 10,000. By now, Alimentation Couche-Tard Alimentation Couche-Tard is 5.5 million and Enbridge is 170,000. ATD has been just fantastic. And I was going to say, I think it was on the live stream on the channel member live stream. We were looking at it. And it's basically a straight line going up to the moon. So, I cannot say ATD is for me one of the top tier Canadian stocks out there. So it is absolutely a great stock to have, unless you have a living spouse listed as a beneficiary. Yeah, exactly. But like I said, if you're in a situation like if you're 85 and you pass on and your spouse is 85, and they pass on a year later, you're still in that situation where they could still end up, especially if you both had a lot in your RRSP, and all of a sudden, your spouse now has double, and it could be very interesting. Oh gosh, Motley not Motley Fool. Vic says Motley Fool says 30K into shop and CSU, and ENG will give you 1 million in 10 years. I don't know. I've never done the math on it, but I always say, when it comes to Motley Fool, take them with a grain of salt for sure. Okay, let's see here. Do you see the big six falling with growing fintech and online banks with low costs and high savings rates? No, I think there's room for all of them. The problem is a lot of these the smaller banks, like even EQ Bank. I mean, yes, they're growing. Yes, they're getting bigger, but it's not at a rate that even threatens some of the big banks. And a lot of people are sort of set in their ways with the big banks. So you take even EQ Bank right now. Um, they're getting better, but they're not there. You don't have everything that you would have in a big bank yet. But hopefully someday they do. Let's see. National Bank is on a tear of late. Yeah, I've liked what National Bank has been doing. They have been doing absolutely fantastic. Oh, and here we got Kurt in the house. Kurt is in the house, and Actaz is in the house. A tax refund just came in. Looking forward to investing it this week. Oh, congratulations! I hope it's a nice refund. That's for sure. Paul says Canadian covered call ETF dividends eligible or non-eligible dividends. It depends on what the companies are. So if you have a covered call ETF that's all Canadian banks, those are going to be eligible, for example. So it really boils down to you have to sort of look and see what companies are within the ETF to determine. And it could even be partial. Like, if you had some eligible and non-eligible, dividend sources within that ETF, you could have some of them being eligible, some of them being non-eligible. It's one of the reasons as well. This is what I always say is that the more you can put your ETFs into a TFSA and avoid all of that headache, the better off you are. Absolutely. Let's see. How long should investors ignore China? ZCH and Z and XCH are down huge. S&P 500 PE is very high. I don't know how long we should ignore them for, but I think right now there's still some pain ahead for China. China's got a few other issues too. China is in a position where they're kind of losing a little bit of their foothold of being, the number one destination of, where anybody wants something, done cheaply. China's losing that. India is taking over more and more. And I know I saw an article today. I don't have this in my news stories, but I did see an article today just mentioning that a lot of the pension funds in Canada they're starting to really, really move towards India and look at different India assets that they can invest in. Let's see. Vic says CP and CNR have yielded better returns than many tech stocks. I love our railroads. Our railroads have been consistent. They're very good total return stocks. So I don't disagree. Abalash says, can you income share RRSP withdrawals with spouse? Good question. I'd have to actually look that up. I have not actually encountered that, so I don't know the answer to that one. Let me see here. Vancouver Isle guy. So Kevin says, the free stuff Motley Fool gives you is better than the paid stuff I've heard. Yes, and that is absolutely true. So what Motley Fool tends to do is they will release some free articles, and they're not bad because those articles, they want to sort of make you think, oh my God, if these are their free articles, can you imagine the paid articles? But that's how they get you. Just sort of saying, I don't like to say bad things about people, but when it comes to Motley Fool, they kind of feel scamish to me a little bit. Paul says taxes still waiting on Wealthsimple. T3 slip that shows on website as of March 31st. Check your CRA, see if they have it. Sometimes they do get it before it shows up on your access part of your web of your Wealthsimple. 25 ain't a high of a PE for the S&P 500. Okay. Anyone read Hillard Macbeth book on housing bubble? I have not. All right. Harold says, would it be worth getting into ZID.to? Yeah, I think it's a good ETF. Now we have for the channel members, it's actually for you guys. The channel members have the channel members choice video at the end of the month. It's the last video of every month where they basically tell me what to do. And they have been hovering around me doing an international video. So hopefully they keep hovering around it. Maybe they hit it this time because I would love to actually start breaking down some of these ETFs for different places like India and a few other countries as well. Let's see. 9 says, do you think Warren Buffett pushes S&P 500 index funds because Berkshire shares are part of the index? No, I don't think so. Not with Warren Buffett. Warren Buffett to me, he sounds like from everything I've read and everything I know about him, I see him as being a very just down to earth kind of business guy. I think if that was part of the reason, I think he would be very transparent about it because he does tend to be very transparent about what he's doing. Vic says after 65 years, you can income split pension, but before that, use spousal RRSP. Now, if I could only find a spouse, there you go. There you go. ZID versus FIH. That could be interesting. All right. Paul says, cannot share RRSP income with spouse 65 years old and RRSP to RRIF can income split with spouse. RPP like DB or DC pension can income split with spouse at 55. There we go. There we go. See, this is what I love about you guys. And this is one of the fantastic things, by the way, over in our Discord, you can get total answers like this. People like Paul will jump in and give you, actually, Paul's the one who pointed out the bot thing that I've added. So that's really, really cool. Vic says, I've picked up some country ETFs like CJP, Brazil, and Mexico next. Nice, nice. Okay, let's get to our next news story. Wow, this is probably the latest that we haven't actually got our news through. So that's cool. All right, American meat rules. So the U.S. has issued a new sort of a directive. It's more restrictive guideline for the use of the word product of USA. So these are labels that they can put on meat, poultry, eggs, things like that. And Americans love to buy American. So when they see these labels, they tend to buy those ones over ones that don't have the labels. So, before this guideline, meat products that have been imported and then slaughtered or repackaged in the U.S. could get that label, which is fantastic. But these new rules are requiring that they're requiring that the cattle also be born and bred in the U.S. for it to get that American-made label. So this hurts Canada because a lot of the beef that we would send to the U.S., we would send cattle to the U.S. They would do everything there, and it would be considered American-made, and it would get bought. So now we no longer are going to have that sticker. So we're going to lose that preference. Luckily, though, we don't have to put anything on the meat that says like made in Canada. So that's good. But we do have to, live with the fact that we're no longer going to be preferential, which is going to hurt our industry a little bit. So we are looking at, we could look at our bottom line getting impacted by this change. So what can you say? All right. Oh, look at this. I can actually get another one in really quickly. Alberta. So Alberta, they had this whole thing on Alberta where they've been trying to, they've been trying to pull some of the Canadian talent to Alberta. They have a new way of doing it now. So they're looking right now to import skilled trade folks from the rest of Canada, and they're going to do it via a tax credit. So they have sweetened the pot by offering a $5,000 tax credit for skilled tradespeople who are willing to relocate and move to Alberta. So right now, Alberta, they claim that they're short about 20 to 30,000 skilled workers. The credit itself, it's going to be for, it's not for all trades. They're basically looking for electricians, pipe fitters, welders, and crane operators. So that's going to be interesting. Now, here's really another thing, too, is when you pull some of these people over, their family come and, it creates a whole bunch of extra jobs, which is kind of cool. So between September 2023 and February of 2024, Alberta has actually added 73,000 jobs in total. So that is just absolutely crazy. I think that the next biggest province is like Nova Scotia, and they're like around 21,000 new jobs that they've created. So, it's definitely kind of interesting to see that happening. So, I know when I finished university, I actually ended up going to Calgary initially just because that's where all the jobs were. So it used to be kind of funny, like, because originally I'm from Nova Scotia, and in Calgary there was like so many people from the Maritimes there. It was just crazy. But we'll have to see. It's one of these things now. If you have a kid and they're getting ready to go to school, they would probably be wise to think about trade school. You pick up one of these trades, like become an electrician. and you're going to make some really good money, and you're going to be in need. You'll definitely do better than if you get like a liberal arts degree, um, or a degree in history. Go get your degree in become an electrician. It doesn't take long. It's a short training, you apprenticeship for a little bit, and then bang, you're making a ton of money. So definitely something to think about. Kevin says, thank God I'm a commercial fisherman working for myself. Oh, nice. Not bad at all. Paul throws in splitting RPP income gives you a 2,000 pension credit, and income splitting a RPP gives the spouse a 2,000 pension credit as well. So there you go. There you go. And that's a nice thing about splitting. And like the video that I have coming out, it's not going to talk about too much. It's going to look at the generality of basically, I think the example I use is a single person. So anyway, there is a lot more that you can do to all of it, especially when you start looking at bringing in a spouse. So, definitely something to keep in mind. And I have a feeling somewhere down the road, I'll have to do a sort of a very spouse related video, which is cool. I mean, it just means I have to go and do a whole bunch of research just to make sure I have everything down. Vic says, why does the tax code punish single folks? Because nobody will stand up for them. I don't know. Yeah, it's just one of these things. I guess, yeah, I mean, most people aren't single, so I guess it's an easy target, but let's see. And yeah, good question, Vic. Yeah, why do we attack the single? It's always made sense to, if, to have a partnership of one way or another. There's so many tax advantages. Um, there's so many ways that you can sort of move things around. So, and I got to jump ahead. I'm going to jump. I'm going to skip you, Ian. I'll be back though. See, Roland Acres Farm. Son just moved to Alberta. Electrician. I hope he's getting that tax credit. I hope he is. Ian says, I'm in the trades. Easy to make 100K a year without student loan debt. Yeah, absolutely. Okay. Beyonce made a song about it. Is that the put a ring on it one? Vic says, I'm in northern Alberta. There we go. Yeah, Alberta's a beautiful province. Definitely. Other than, it's cold in the winter, but it is definitely, there's so much to do there. So much to do. All right. Let me pull up the next news story as we're slowly getting caught up with the news. All right. We got a leprechaun in jail. So Loblaws versus crime. So Loblaws is looking to fight back against shoplifters. With an economy in the tanker the way it is right now, and with a lot of people with inflation and not having a lot of money, a lot of people are turning to retail theft as an option. So retail theft has been up about 300% in Canada since 2019. So we're talking about a loss of about $5 billion a year to retailers. Now, there's probably a few that are saying, oh, yeah, well, Loblaws, with how much they charge, they can afford it. But it's not just Loblaws. I mean, even little mom and pop stores, everybody gets affected by theft. And it's one of the reasons as well, like, Loblaws is not going to just absorb this. They're just going to pass those prices on to you. So keep that in mind. Now, what they're planning to do with Loblaws is they're looking at doing receipt scanning. So basically, they have a receipt scanning technology, and right now they're using it at 4 locations as kind of more of a test. So kind of what happens is, well, the new system will block the self-checkout exit with a metal gate, and then it will only let customers leave after they've scanned the barcode on their receipt. So they want to make sure you have a receipt. If you try to pass it without scanning your receipt, apparently an alarm will go off. Now, this, of course, makes me wonder, like, I don't know, how is it going to know that you didn't steal half of your order and just paid for a couple of things to get the receipt to get through? So that would be one of the questions I have. Another question I have is, what if you go into the store like to get a prescription or something, or maybe you just went in to check on something and then you're leaving and you're not buying anything? So, there's a few different issues in there, unless there's another way for you to go. I'm sure they have an idea for it, but, it's getting kind of interesting. It's like, well, I mean, like Walmart with some of the people checking receipts at the doors, and well, Costco has been doing it for years and everybody's kind of used to that. So just something to keep in mind. All right, back to the comments. Paul says if you have a spouse and they cannot use the whole personal amount or DTC amount, you can put part of those on your taxes. Perfect. Ian says, be single. The government gets half your money. Get married. Your ex gets half your money. Oh, that's funny. I actually like that. Uh, Vic says, I noticed cheese has a sticker thingy on the bottom. Okay. Vic says olive oil now $12 a bottle. Yes. And I've actually, this didn't make it to my news, but there have been criminals actually targeting olive oil just because it's now getting so expensive. So just something to be interested about. Prairie says, oops, been under the weather for the last few days. Fell asleep to the live stream. I will have to watch the replay to see what I missed. Oh, no problem. No problem. I hope you feel better. I hope you feel better really soon. Paul says, Ian, marriage or common law takes work, but choose wisely. And Vic saying, invest in olive oil. They should quote WTI and olive oil prices daily. Maybe they should. Act as says, maybe the store should invest in more staff. Or maybe they're just waiting for the robots. I mean, like I said, I mentioned that figure one robot. Very impressive. I could see a point in the future where you have robots patrolling the stores. And you try to, the kid goes in and steals a penny candy. Well, I guess there's no such thing as penny candies. Steals $1 candy. That robot's going to be there and saying, "Put that back." We'll have to see. The world is getting. I think the world right now is in the middle of being really transformed. So that's why I've started calling the AI revolution, because it's like the industrial revolution. Like, the world's completely different on both sides. Same thing with the internet revolution. And this here is just one more, the AI revolution. I think it's going to be really, really interesting. And I think it's going to happen a lot faster than most of us even know. That's the thing. All right. Whoops. I missed this. Paul said, these self-checkouts all have camera video records. They will catch you later and send you to jail. Maybe. Or there's like also I think is it Amazon that has these grocery stores now in the States where basically you scan your card to go in, and everything you put in your cart, you just wheel it out because it has little trackers on everything. So it knows exactly what you're leaving with, and then it throws it all onto your card. So that's kind of interesting. It's kind of like, it's like nobody's working there. I imagine there has to be somebody, but, definitely interesting. Abalash says, marry someone equal to your education and wealth, and no need to worry about losing money to an ex. There you go. Vic says, I'm tempted to put in wild broccoli code instead of the one for crowns. Okay. The whole broccoli code. Okay. Yeah. And you know what? People do that. Like, I mean, how many people go in there and, they pick up the organic bananas and they put them on the scanner, and then they hit, instead of typing in the code, they hit manually and they just go to the regular bananas. I'm sure there's a lot of people that do that. Walmart in the USA will have self-checkout that you need a $88 a year membership to use. Oh, interesting. Now that is an interesting thing. Here's the funny thing. I get most of my stuff delivered anyway, but if I was, not getting stuff delivered and I went to Walmart all the time to do my grocery shopping, I might be tempted to pay that just because, only because I love the self-checkout. I can get through it so fast. And plus none of my stuff gets packaged the way I want it to be packaged. Vic is looking for a sugar mama. Well, good luck with that. Good luck. Steals $1 kit. Yeah. Maybe AI can find me a wife. There we go. Or maybe AI can be your wife. Get like get yourself a girl robot. It's actually not that. Funny thing is, even though I'm joking, I'm really not. There's a lot of kind of sex type robots in Japan. It's like big in Japan. That's going to come. Like, people will have, whether it be a wife or whether it'll be a friend or just companionship, like, especially with seniors. Imagine if a senior can have a robot that, basically will listen to all of their stories and help them out. Oh, that'd be fun. That'd be great. Paul says, peppers color discriminate. Green are cheaper than red ones. Yeah, but I think there's a little bit of difference to them as well. I think the red ones I think have a better to me, I think the red ones taste a little bit better. Abalash says, anyone want to start a co-op grocery store or take on Galleon Weston banana bread groceries? There we go. Let's do it. Let's do it. We'll get into the grocery business. Stafford wife. Haha. Ask Siri to marry you. Go ahead, try it. She see what she says. I will do that a little bit later. I want to at least get some candlelight going first, though, before I pop the question on Siri. Clean your AI wife robot. Well, hopefully by that point, the AI robot can clean itself. That's what I'm thinking. Lisa's coming in to clarify a few things. Green peppers aren't ripe. That's why they are cheaper and taste like crap. Oh, okay. There we go. That helps us out there. All right, let's. Oh, we got more news. We got more news. A drier St. Patrick's today. That's what we're looking at today. So St. Patrick's Day is apparently a more sober holiday than just a decade ago. So people aren't drinking as much anymore. There's basically three big reasons. One of them, of course, is the economy. So alcohol is expensive in a restaurant, so many are choosing to cut back or forgo it completely. People in general are ordering fewer beverages when they visit a restaurant, so that's kind of a big thing. And alcohol is one of the first orders to go. That makes sense. That does make sense. Another one of the reasons is that as the Zoomers are moving into drinking age, a lot of them are basically not drinking as much. So they tend to be as a generation, they're tending to be a lot more health conscious, which also includes less drinking when they go out. And the third reason, and this was one that I did not see, but immigration. So apparently, there's a lot of immigrants that we have in Canada that basically come from cultures where drinking is just not a big thing, and that is translating to less people drinking on St. Patrick's Day. I mean, a lot of people probably still drink. Like the bars, what I read is that the bars still go up about 25% in volume, so they make 25% more in alcohol sales today than they would. But apparently, in the past, it used to be much more. So definitely interesting. So as people are ordering fewer beverages, um, we'll just have to we'll have to see how this all goes. Uh, it's funny. I personally, I mean, I don't drink except for when I did my 1,000 sub stream. I drank on that, and that was definitely funny for sure. All right, and let's just knock out this one. All that is gold. So after the last story, I was thinking to myself, what is at the end of the rainbow? A pot of gold. So let's do a story on gold. So at the end of last week, gold actually hit a new all-time high. Basically, it got to 2,185 USD per ounce. Huge. Now we have been seeing gold's price going up and up and up. Actually, it's gone up 30% since the beginning of 2023. So that's not too shabby for those of you who love your gold. Now, part of the reason is because, well, gold tends to do really well when there's a lot of uncertainty in the market or uncertainty all around. So people tend to buy gold when they're worried about anything from inflation to global instability. And of course, wars tend to help on the price of gold as well. So that's definitely interesting. Now, the reason for that is when we do have a lot of instability, the market, tends to move up and down a lot. Gold doesn't. Gold is that hedge against, well, instability, inflation, and a whole bunch of other things like that as well. The other thing too that's been pumping gold's price a little bit lately as well is people starting to think about the rate cuts. So those people who, for example, look at GICs, they get their 5%, or they're looking at bonds. As rates come down, so do the returns on some of these fixed income, and it makes gold a much better alternative. And people tend to flock a little bit to gold because of that. Now, analysts are predicting that gold may get up to $2,300 before the end of this year. Now, even though we have an all-time high, it's in a way not an all-time high, because I found this interesting little side fact. So if you adjusted for inflation, the gold price, well, gold actually would have peaked back in the 80s at 3,355 USD per ounce. that is, of course, adjusted for inflation. So kind of like when you look at the movies and the best movies of all time, when you adjust them for inflation, all of a sudden Gone with the Wind is the #1 movie of all time. So definitely something to think about. All right, let me get back here, grab a couple of these. Vic says for 10K subs, no, I'm not going to do a line for 10K. Holy banana bread. Um, oh, a line dance. That's probably more. You have a better chance of me doing a line dance than doing like a line, a line. I was about to say bad Vic. Yeah, exactly. Whoops. Kendall says big difference between doing a line versus doing a line dance. I know, I know. Abalash says physical gold versus gold mining stocks in relation to inflation, and that's an interesting thing. Here's the thing: physical gold is not going to be impacted by management. So if you have a gold mining stock and it's being run by idiots, well, there's no guarantee you're going to hold your value. Whereas physical gold, it's not going to be impacted by poor management, things like that. So I would say physical gold would be, in general, better than gold mining stocks. Carl says, I have poor man's gold, silver. Yeah, well, silver's, silver has its time in the sun, and in the sun, and I think it's still going to do good. So I do like silver. I like gold better, but I do like silver. Okay. And Vic says, if you adjusted for inflation, real estate is bad unless Toronto or Vancouver. There we go. I have odd man's gold, BTC. Yes, we're going to talk about BTC here in a moment. Let's see. Amvas says, appreciate your thoughts with BMAX, has covered calls and leverage, fixed income to balance, plus considering HCAL, lower risk. Is there a better ETF? I'm nervous handling my own investment. Thanks. Here's the thing. I really, really, really try to avoid leverage whenever I can. It's a great way to lose money fast. It's also a good way to make money fast. But yeah, now if it is, I know with something like BMAX, they don't have a lot of leverage. So, and it's only a percentage of the account that is being leveraged. But I'm always a little bit careful when it comes to when it does come to leverage. Just one of those things. And let me just pull this up here for a second. And 9 is right. You are paying for a bigger management fees on it. So, you're paying for the extra work. If it requires extra work, you're going to lose more of it that way. To me, getting back to here, I always look at leverage as being you're trying to shortcut the market. So instead of waiting for your return, you're trying to say, I want it twice as fast. But keep in mind that can turn on you. And we'll have to sort of see. Now, something like BMAX, I definitely better than, for example, going with an inverse ETF that's using 2x or 5x leverage. Definitely 100% better than that. But just be careful and just be aware. Be aware that there is extra risk when you are doing leverage. Let's see. Jungle Eddie says, I'm better late than never. Welcome, Eddie. Good to see you. All right. And Jordan's in the house. Hi there, Candace. Just wanted to pop by and show my support. Always good to see you, Jordan. Always good to see Jordan in the house. All right. All right. I don't have a lot on the crypto side. So we get a little bit about Bitcoin, a little bit about Ethereum. So good old Bitcoin hit new all-time highs this week. It actually made it up to $73,794 on Thursday. And of course, this is kind of a normal thing for Bitcoin, retracing after hitting all-time highs. And that's exactly what it did. So it retraced into a nice little correction. It made it down to, early this morning, it made it down to 64,522. Although since then it has moved back up. It was above 67K when I was pulling together the information for this. And where are we at right now? Right now we're at 68K. So it's gone up even a little bit further, a little bit higher. So that's not too shabby. And for those people who are new to crypto, these are absolutely normal. The people who get wrecked are the people who all of a sudden, when Bitcoin decides to drop, $3 or $4,000, are the people who are like, "Oh my god," and they sell, and then it turns around and comes back up, and those same people are like, "Oh man, I can't believe it sold," and then they buy back in. It's like, no. Um, it's kind of one of these things. I have a right now we got a whole bunch of positive stuff going on for Bitcoin. There is so much inflow into these ETFs. Um, if it goes down, hold on, just hold on, diamond hand your way back up. You're going to go back up. Um, if we ever got into a situation like in 2021 when we had a massive crash, that's kind of one of those ones that's scary. That one's totally scary because that was like, you're going down like tens of thousands of dollars. But even then, if you held on, you would have gotten back. It's a situation though. A lot of times people, if they put too much, and this is the thing, if you invest more than if you invest money that you need to have access to right away, and something like that happens, you kind of get yourself in that situation where you don't have a choice but to realize your loss. And that's always a bad thing. So even though they say never invest anything that you're willing to lose, you shouldn't have to lose anything you invested. But I always say to myself, my version of it is never invest anything that you're not willing to leave in a low place for a little while in case the market goes bad. And then wait for more sunny days to come a little bit further down the road. Now Ethereum, I mentioned that I did have a little bit on Ethereum. So Ethereum also had a really good week. Ethereum actually broke that $4,000 mark again. The last time they were up around $4,000 was basically December of 2021. So they did make it up to $4,095 on Thursday. But as Bitcoin decided to correct, so did Ethereum. They made it all the way back down to 3411. But if you're into Ethereum, that's probably was a good time to get back into it. So I have a feeling Ethereum is going to go back up too. And, it's kind of the whole way that crypto works. So normally what happens is think of it this way, Bitcoin always sort of leads the rush when it comes to the overall market. Then once Bitcoin has finally had its run, and Bitcoin is still starting. So Bitcoin is not even remotely towards the end of their run. After Bitcoin, it then goes to the altcoins. So things like Ethereum, Polkadot, Solana. And then from there, after they've had their run, it then goes to the meme coins. So if you remember all of those meta coins, the metaverse coins, a lot of them were in that last part of the run where they were doing these crazy stuff. And then, of course, they all died away. I don't know if any of the metaverse coins are worth anything now, it's a sad. I mean, a lot of them, I think part of it too is just the misfiring of the metaverse. And now I think the metaverse is at the point where it's pretty much the only way metaverse is going to get resurrected is if AI does it. So it'll be kind of an AI fueled. Basically AI fueled. All right, I'm going to get rid of that. We're going to go up to big screen. Here we go. We're finally done the news. That's fantastic. I love it. Paul says, some real estate has gone up on average 22% per year in the last 25 years, at least in the BC lower mainland. Yeah, that's crazy. Let's see, near up 22% today and 144% on the month. Absolutely. Yeah, absolutely. I mean, real estate has been one of these things like, the Canadian real estate market is absolutely it's inflated as far as I can see. It's one of those things like, and here's the funny thing, like right now, I don't think the prices of real estate, I can't see it going up a lot more than where we're at right now. But here's the thing. It's still supply and demand. And if we keep the high levels of immigration coming in and we don't build, prices will go up, especially rent. And it's kind of crazy. Like I know not that long ago, I was renting just in Nova Scotia. I was renting a 2-bedroom apartment for I was about 1,500 a month. Now you can, now a 1-bedroom apartment in Nova Scotia is about, we're talking Halifax area, is like about $2,000. So it's getting up there. It's getting pretty crazy. And as long as we keep on, piling in the people without building, we need to do the building. We really have to put our focus on the building. So definitely interesting. Okay, so coming up this week, we do have the inflation information coming out on the Canada side. So on Monday, we've got PPI, so the Producer's Price Index. And on Tuesday, we got the CPI, the Consumer's Price Index. So that's going to give us a whole bunch of information on how our inflation rate is doing. Now, our next Bank of Canada interest rate decision won't be until April 10th. And then after that, the next one after that won't be until June. I believe it's June 5th. So that's the one. I'm thinking the June one is where we're going to see that first rate cut. I'm still sitting there. But now, mind you, the CPI and the PPI that are coming out this week, that's going to really, really go a long way towards whether or not I'm going to still be confident about June. But I'm pretty confident right now. And I think they're going to be good. I think they are going to be good. Now on the U.S. on Wednesday, on the 20th, the Fed's going to have their interest rate decision. It should still be a pause, but it'll be interesting to see what the wording around that is. Like a lot of people now are starting to say July for the first rate cut in the U.S., and I'm among them. I think July is probably more reasonable than where we are. Let me see here. Paul says 45 people watching. You said you do not see the live count, or was that only? Yeah, that's only with the member. When I'm doing a members only stream, it doesn't give me a view count. But here I can see it. Like, yeah, we're at 45 now. I think we peaked. We were up around 53 earlier. I saw that on one of my glances up at the counter. And that's fantastic. I always love the more people, the better, which is always great. Now, earnings wise, coming up this week as well. I know you guys are going to love it. I have to say that word again. Alimentation Couche-Tard is giving their earnings this week. So is Pow and Boyd and two other little stocks like Diversified Royalty. So DIV is giving their earnings, and DE, Decisive Dividend, they're giving their earnings as well, and I think they're going to be fantastic. So I'm looking forward to seeing what happens to the price of DE with those earnings. Well, we might see a little bit of a jump with them. I'm pretty bullish on that one. So yeah, that's going to be kind of cool as whoops, there we go. Just get rid of that. There we go. For some reason, it did not want to. There we go. I was getting a couple little errors over here on this side, but they have now all fixed. So yeah, that's what we got coming up. All right, on the channel, what we have coming up is we got a lot coming up. So as I said, I'm going to release it. I'll release it like as soon as I finish this live stream. I'm going to start uploading the other video. So that is the RRSP meltdown video. So I will upload that. So you'll have that tonight if you're a channel member. Tuesday, if you're a non-channel member. We also have, we got, of course, our market close on Wednesday, and we got a deep dive. So right now, currently, it is our second ETF deep dive. So we do one of those every month. So that will be coming out on Friday. Right now, ENCC is leading the vote. So if you have not voted yet, head on over to the community tab and, throw your vote up. Make sure that your vote gets heard because, and sometimes it's not even like sometimes you may, maybe the one you're voting for isn't going to win, but sometimes you don't want it to end last because whoever gets the lowest number of votes, they're not up for the next vote. They're gone. They're like out the door. So just something to keep in mind. All right. Gim says, is tech overvalued? Tech looks overvalued, but
I'm not sure I understand.
Hi. Sorry. Wow. She had this. I was looking at my watch and it was like everything I said for the last minute was written out on my watch. And then she was like, I don't understand. Anyway, tech overvalued. Tech does look overvalued from the outside. But the reality is, as long as AI continues to develop, and there's no reason to say it won't, it's going to get bigger. It's going to get bigger. I don't even think of this. I don't even see this as a bubble. I know some people are like, oh, we're in a bubble. It's going to break. I don't see that. And I see like NVIDIA leading the way. I think Microsoft is also going to do really, really well in this AI revolution, which I'm calling the AI revolution. I should trademark it and get paid like a quarter every time somebody says it. It probably isn't that easy, but I definitely see. I definitely see tech. I think is in that unique situation where not all tech, like I want to be clear, not all tech is going to survive. There's going to be, it's kind of like back in the .com days. A lot of companies would basically throw .com on their name, just and instantly they would go up in value during that bubble. But that was the way a bubble works. Now, right now, I don't think we're in a situation where a company can just say, "Oh yeah, we got AI," and that's going to instantly drive them up just because they're tech. I think you're going to see sort of like the good companies, the good AI companies will rise to the top. That's one of the reasons, like I say, if you don't want to do all that due diligence, just start looking at it at tech ETFs because you're going to pay. Yes, you're going to pay a management fee, but they're going to at least sort of weed through and do all of that research for you. So you'll look right now, most tech ETFs, if you look at their largest holding, Nvidia is up there at the top because, well, it should be. Watch Apple coming up. Apple is some people might say that they're late to the party when it comes to AI, but they're not. Apple's one of these companies that doesn't show you a product until it's ready. They're not going to give you like a product that's not ready for prime time. So you look at the AIs now where AIs make mistakes. Apple isn't going to give you one that's going to make mistakes because that sort of reflects badly on their whole brand. So you're going to see something from them soon, like probably very soon. I have a feeling you're going to see an updated Siri by the time the next iPhone comes out. So just something to sort of keep in mind. But watch them. I know they actually bought a Canadian AI company last week. So they have been buying up a lot of big talent. They've been buying up a lot of AI companies. So Apple is got something going on, and it's going to be really interesting to see when that finally comes out. So I'm looking forward to that as well. All right, and the NASDAQ 100. Yeah, I think a NASDAQ 100 ETF is really good, a good area to start for sure. That's where you're going to see a lot of the companies in the NASDAQ 100 are going to do absolutely well. So I would say, yeah, a good ETF on the NASDAQ 100. You won't regret it. That's what I'm going to say. Or if you want to be that person who comes in and says, I'm going to do all the research myself. I'll get NVIDIA and I'll get this and I'll get that. There's definitely a lot of different ones that you can do. Ali Shahalik says, I've been curious about what do you think of Payfare as long-term? I don't have an opinion on that, to be honest. I haven't really looked into Payfare. I don't want to I'm not going to ramble and answer when I don't have the data to give that to you because, I don't know I don't know a lot about Payfare. What is your favorite tech AI ETF if you don't mind sharing? Thanks. Right now, there's a couple. Like I like HTA. So that's the Horizon Tech Achievers. And they also have a covered call version, HTAE. So those are definitely. HXQ is another one I like. And there's a covered call version as well on that, QQCC. So, there's definitely some good ones out there. Basically, look at what they've got. As long as it's one of these situations, how sometimes in a bull market, we get to that point where you could have a monkey throw a dart at the board and you'll make a profit. Tech is with tech ETFs is starting to feel that way because almost every tech ETF is going to have the Magnificent Seven in it. So your big ones like your NVIDIAs, your Microsofts, your Apple, AMD, a whole bunch of others, they're going to have them all in it. And that's not a bad thing. That's not a bad thing at all. Gmark says, Intel has been bashed a lot, but still great products. Do you think it's a good buying opportunity? There was something I saw earlier today about Intel. It was just, I saw it in passing, but I remember saying to myself, that's good for Intel. I can't remember exactly what it was, but there was something, and it was something in regards to AI. So I think Intel is still a good company. I wouldn't count them out. I wouldn't count them out. So yeah, do you think it's a good buying opportunity? It's definitely worth a good DCA for sure. Sammer says FTEC and SMH. Yes, yes. Uh, yeah, I mean, once again, it's kind of one of that thing. When you start looking outside of the big companies, you're going to you're going to be taking a little bit more risk. That's one of the reasons that I think the ETFs are a strong way to go. Um, so with these ones, it's hard to say. It's hard to say. Um, but we'll have to see. Well, I think we're going to have to see on that. G Mark says they are splitting the company into a foundry and product. Okay, let's see here. For tech, I am in XQQ. I voted for that one on the next deep dive, but it is in the middle of the pack. Yes, so XQQ once again, another good ETF. It's got a lot of Nasdaq in it. Pretty much anytime you see QQ when you're looking at an ETF, you're probably going to have Nasdaq. It's probably going to be a Nasdaq based. Hey, Starbucks. Which is funny because I remember in the old days of the internet, anytime I used to hear QQ, it meant that you're crying, which was kind of funny because yeah, it used to be used a lot, especially in gaming. But anyway, that's kind of a neat little thing. All right. All right, if you guys got any last minute questions, get them in. Let's get them done here before time is up, and then we can all get back to drinking some green beverages or at least coffee, whichever it is that you prefer. So once again, I was going to mention as well, we are going to have on April 10th, we're going to have that special one night only this week crypto night special. I don't know who's going to be on it. I'll be on it. That's the only person I know right now, but I'm starting to reach my feelers out to see who I can find. If of course you know anybody who you want on it, who let me know. Maybe I can reach out to them and see if they are up to it. Eddie's going to have some coffee because I'm at work overnight. Oh, okay. Well, yeah, at least coffee makes overnight working. I've done the graveyard before. It's not fun, that's for sure. It's been a long time. A funny story. Might as well go off on a tangent here. So I used to work for Compaq, so computers, and I got myself on a graveyard shift. I was trying to get off the graveyard shift something terribly. And I was like, how can I get off the graveyard shift? So what I did is my manager was a landlord. He had a house for rent. So I basically rented it. And then once I rented it and moved in, I went to HR and I said, my manager is my landlord. That's a conflict of interest. And they were like, you are right. That is. We can't have you both working. You can't work under him. And I was like, yes. That quickly, karma bit me in the butt. Basically, they moved him off the graveyard. And I was just like, I can't believe my well-earned plan didn't work. So it goes to show sometimes the best laid plans don't always work out, but that was kind of funny. Abelash says, I think Intel's problem is x86 is on the decline. Their processors are not great for mobile devices. Yeah, I mean, I think Intel is going to have to, they're probably going to have to update some of their architecture for sure. I do not dispute that. And especially with mobile is kind of, it's actually funny because from my perspective, most of my computer time is spent on my Mac Studio. So, I'm used to the big screens. I don't do a lot on my mobile only because it's like, normally I'm in my office and I do everything there. But a lot of people, like when I go through my analytics and see where people are watching the channel from, there's like so many people like watching it on their phone. Or the other thing that's interesting is their TV. So a lot of people watch on their phone. A lot of people watch on their TV. You know what? Next Sunday, I should do a poll at the beginning just to see what people are watching it on, so we can sort of look at it together because I think that's kind of funny. Um, okay, Amfast says, what percentage do you allocate to crypto? I'm considering, but new to this. So right now, currently, um, I would say most of my portfolio is stocks. I do have like where I probably have crypto the most is in my trading account. So my trading account, and it's not even that I'm buying crypto. I'm actually swing trading right now a BTCC.B simply because I can see exactly where it's going. It's so predictable for me because, um, you know, paying attention to what Bitcoin is doing, I have a system in there that, and I kind of showed a little bit of the system on the channel members live stream on Thursday. So if you want to check that out, down below you can join the channel membership and you can watch all the previous ones. So it is there. I kind of sort of shared a little bit of that. Um, but percentage wise, to me, it really depends. Like if you want to go, like some people go full bull crypto and they put everything into crypto, that's fine. I mean, there's more things to do. I always say figure out what you're comfortable with. If you don't understand crypto, then don't put anything in it. Um, so maybe start with maybe Bitcoin. Take a look at Bitcoin. And if you understand Bitcoin, you're happy with it, you could always start with an ETF, see how that does. Or if you want to actually hold Bitcoin, you could certainly go into that. So I would say treat it like any other asset. I mean, what are your comfort levels? Like, for me, for example, if I was going to if I was going to invest in straight Bitcoin, I don't like any one asset to get above 5%. So I would probably limit myself to about 5% of my portfolio. But remember, I'm stocks. I am stocks. I do like crypto. And I understand crypto, but I am primarily a stock investor. So it comes down to your own personal comfort, to be honest. Anyone have a buy of the week if they had money to spend this week? Honestly, right now, as HMM.A has retraced back, that would be higher on my list for sure. So I'm just putting that out there. You got out of jury and graveyard shift. I eventually did. Actually, how I got out of the graveyard shift, since I told you how I didn't get out of the graveyard shift, is after that failed, I came up with a new plan. I basically decided I was going to get promoted. So I found a second tier level department, and I was like, I approached the manager of that department. And I said, I would like to, I would like to become a spare, so that way when there is an opening, I would have the experience, so I would have a better chance of getting promoted. And he was like, we don't have we currently don't have any training going on for spares. And I said, well, here, let me give you this deal. So I said to him, I said, look, because at the time I was working 4 nights and then I had 3 days off. I said, look, one of my 3 days off, I will come in and I will work 8 hours a day free in your department, so that I could learn and get myself to become I could learn the department so that I could become a spare. And he was like, okay, sure. If you want to do that, absolutely. So, it took about 4 shifts. And I came in each week, did that 8 hours for free, got the skills, became a spare. And then when the opening did come up, I had already been doing the job as a spare. So I had absolutely no problem getting hired. And that got me off the graveyard shift. All right. Amfast, I appreciate knowing more of your initial investing story. Do you have a video or page already with this? Value your insights and time. Yeah, it's come up a few times. I think it's been on a few of the channel member videos as well. In a nutshell, my background is mostly science. I did a double major in university in biology and chemistry. I did water testing, and then from there, I've just found it really boring. So I went into different management. I went into technology, did a whole bunch of the things. And then eventually I found that investing was something I was interested in. And at that point, I sort of threw myself into it as initially as an investor. then I decided after a while that I wanted to share the knowledge, the passion that I've picked up. And eventually that led to the channel and blah, this. There we go. That was the fast version of it. But, nonetheless, it was a version. Let's see. G Mark says, watching on a good old fashioned desktop here. Nice. Nice. I love it. I love it. Paul says, I'm on a phone for chat and Android TV. There we go. Prairie says, I set up a PC as a dedicated AV system connected to my TV. Oh, that's not too bad. Let's see. Crypto understood they small dips are whales trying to shake out retail investors. Yes, sometimes that will happen. And sometimes it's not even that they're just trying to shake out the small investors. Sometimes what they're doing is, let's say, for example, the price of crypto is at 70,000. And you just hit 70,000. We'll use that as a psychological level. So some whales will actually say, okay, I'm just going to sell a whole bunch of stuff. They'll sell a whole bunch of their crypto, knowing that it's going to cause a little bit of a blip in the mark. And they know that other whales are doing the same thing. And you get a whole bunch of whales working together. It drives the price down. Now, what then happens is the retail investors see that and they start going, it's the sky's falling, and they start selling, and it drives the price further down. Now, these whales who started it then start scooping up Bitcoin, and they basically buy back what they had plus a little bit more because it's now a little bit cheaper, and then the price starts heading back up. So what they're doing is they're using a strategy to take X amount of Bitcoin and turning it into X amount of Bitcoin plus maybe B, whatever the extra is. So, it's kind of that little thing. And that's kind of what I do when I'm day trading Bitcoin, like, one of these Bitcoin ETFs, except for I'm not buying more. What I'm doing is if I, let's say I buy it at, or I sell it at, we'll go $13, and then it falls down to $12.50. I buy back the same amount at $12.50, but I've now got leftover money. So I'm using that leftover money, like I'll throw that on credit cards because I keep a constant amount of, of whatever it is I'm trading. So it's just kind of just an interesting way. It feels like you're going backwards, but you're actually not. And it's kind of that neat thing. Now, sometimes, if I do really, really well, I might actually increase the number. But, it's just kind of an interesting way of, keeping my stock at the same level. Because I look at it this way. You take a look at, take Bitcoin. If Bitcoin's at 70,000, and it falls to 50,000, if I've managed to get out at 70,000 and ride that down to 50,000, that's a lot of extra money. And I buy in exactly what I had at 70,000. Then it returns to 70,000. I have the same amount of money I had in the beginning, plus this big chunk of money on the side that, I didn't have to use to buy back in. So anyway, one of these days I'll make a video on it of some sort because I think it's kind of interesting. Jerry says, bought some Kokinu, expected to 100x. It could. It's not, right now it's not in the it's not for really the altcoin time yet, but they are starting to pump. They are starting to pump for sure as more people move into Bitcoin. Do you think HMM.A could drop to or below $10 this week? It could, but I don't think it will. I can't remember. I thought it was around $11 at close on Friday. So I don't think it's going to go down. I don't think it'll go that low. But if it does, that would be a great buying opportunity. That's for sure. Jerry says there's also black. Oh, I'm not going to say that word out loud because I know it's going to sound really bad. There's also that one there, but I'm not going to get into that. Yeah, exactly. There we go. I was just reading it along and I was like, whoa, wait a minute. I almost said it. So yeah, I'm not going to say that. That's always fun. All right, everybody. I think we're at the end. It's not completely 2 hours, but 1 hour, 53 minutes. And the funny thing is this week used to just be 1 hour, but you guys have just been so fantastic and driving it to, to longer lengths. And that's cool. I have no problem. So we'll be back here again on Wednesday with our market close. We'll be back here again on next Sunday. We'll do it all over again, and it's gonna be fun. I'm loving these. You guys are absolutely best community on the internet, hands down. You guys rock. All right. Until then, we'll see you guys later. Take care, everybody.